Welcome to this week's edition of Beyond Wall Street, the show that's committed to helping take the mystery out of Wall Street and helping you make sense of it on your street. I'm your host, Kristen Oakley, and I'm here today with Kenny Porter. He is the president of Kenneth Porter and Company. Kenny, another great week to be with you. How are you?
I am great, Kristen. How are you?
I'm doing well, thank you.
Awesome.
And I'm so excited about today's show. If you are a business owner or you know someone who is a business owner, you are not going to want to miss today's show. It is going to be jam-packed with valuable information that you're going to want to know in order to help your business from a financial planning standpoint and specifically with tax savings as well.
Yeah.
So, Kenny, my gosh, first of all, tell our audience a little bit about the clients you serve, because I know that you serve a huge amount of business owners in your community.
Right. Thank you for that introduction. Most of our clients in our Hampton Roads community started with a military background. And they went from the military to taking this big step into being an entrepreneur. Right. And so we cheerlead that. We cheerlead folks who want to take the opportunity to maximize their wealth by taking risk in the business community. And you know, the Small Business Administration says that 95% of all businesses that start year one are finished by year one.
Wow.
And that's an unfortunate statistic, but that really just goes back to, with proper planning, proper strategies, great advice, you can beat those statistics. And that's what we're here to help our clients do, who are navigating from one phase of life into another, like starting a business or operating a business of a going concern in a way that is profitable.
Right.
And one of the things that we need to do is focus on the tax planning, because most businesses or business owners are very good at whatever skill set they bring to the table, and they're an expert in that area. But where they don't have a lot of time is to navigate through all of the different rules that affects them from a tax point of view.
Right.
So that's where we come in and take a position as almost like an outsourced CFO or Chief Financial Officer. And we want to help our clients navigate through all of the rules that can erode the wealth. We want to try to put in strategies and put in systems and processes that mitigate and minimize those risks. I tell you that the tax code is not fair to the individual taxpayer. It's just not. But one way to combat that is to start a business. And if you own a business, you have the opportunity to maximize the tax code to minimize your taxable events. So, you know, the idea is to take someone who might be a sole proprietor and they're starting out without any corporate protection, is to look at them to see, should they be an LLC, a limited liability company? Should they be a subchapter S? Do they have enough revenue to really qualify to be a traditional C corporation? Do they have partners? And so all of these things come into play when we start talking about the tax planning and the investment planning as it relates to your individual business. One of the things I ask business owners in my initial interview is I'll ask them, Kristen, what's your favorite stock? And what's interesting is that the answer that I get almost always is they'll tell me, maybe it's Apple or maybe it's Microsoft. And my response typically is, well, that's too bad, because I was hoping to hear you say your favorite stock was your business.
Your own, right?
Your own company.
Yes.
And that's where you have the greatest opportunity for the greatest wealth, is in something that you can control. You can't control Apple. You can't control Microsoft.
Yep.
That's going to be left to the board and to the CEO and the officers of that corporation. You can control what happens in your own business. And one of the things that we want to try to do is help people control their tax consequence. And the way we do that is creating tax strategy that mitigates and minimizes those risks that taxation brings to the table.
Well, I think one of the interesting things that you're speaking to is I've been blessed to know a lot of entrepreneurs, and I know that one of the pain points is you feel like you have to be all things to all people, right?
Yeah.
You can't just show up and be good at what you're good at doing, because all these other things need to be taken into consideration, need to be handled and managed. You kind of come in as that chief financial officer, if you will, and kind of help make sure that all that is lined up appropriately, everything's being filed appropriately, but then beyond that are able to look for more tax efficient ways for someone to run their business.
Right, and the way we do that's much like what the way we would handle it with an individual, is that it starts with a discovery process. So in our business discovery, we just have a few more questions there where we're asking about how your business operates, how is it structured, do you have multiple entities, do you have multiple customers, what are your KPIs or your key performance indicators that you use in your business to measure your progress and measure your wealth components of your business. But what we also do in that is we start finding out, well, who's involved in your business? Do you have family members or children involved in your business? And one of the great strategies that's available out there is that if you're a startup business, you need help. You know, when you're starting alone, you're the chief bottle washer, chief cook, and you have all of those responsibilities. Well, if you bring family members in, and you have revenue coming into the company, there's a way to do tax transfers to those in your household under 18.
Okay, so tax transfers.
Right, so transferring it from my tax rate to a lower tax rate by putting my children on payroll. And so if my children are on payroll, I can pay them. Now they have to have a job, so that job can be defined either through a contract or work for hire agreement, or actually putting them on your payroll. If I have an LLC, then I can put them on my payroll and I can transfer that income from my tax bracket to their tax bracket. And so let's say they're under 18, they're working in some form or fashion within the company.
Right.
I can pay them up to their standard deduction.
Okay.
And then when I pay up to that standard deduction, there's no income tax, and there's also they're not subject to self-employment tax. So those dollars can come off their balance sheet, income tax-free, and mom and dad can control that money up until they're 18 and what it's used for.
Right.
So I have one client that has 4 children under the age of 18.
Okay.
And we're taking out over $52,000 a year from their corporation.
Wow.
Income tax, I'm sorry, from their LLC,
Right.
income tax free. Now, little asterisk there, if you have a subchapter S, then you're going to be responsible to pay the self-employment tax,
Right.
but you can avoid the income tax.
Wow, so much goes into this. I mean, clearly, and I know we're just barely scratching the surface so far. But for people that are watching at home today, what would you like to offer them as a way to be able to help them if they're navigating all these different complexities?
Yeah, so if you are a business owner or wanting to be a business owner, maybe you're in that pre-retirement or retirement phase and you're wanting to launch into this next area, I cheerlead you. But I want to tell you, you need to take a look at everything that you're doing financially and come up with a plan, come up with a strategy, and how you're going to mitigate and minimize the greatest eroding factor to your wealth, taxation. And so we want to offer you a complimentary review to be able to look at what it is you're doing and seeing if we can improve upon that. And we do that with no charge. So if you'd like to have that opportunity, my team is standing by. The phones are open at 844-575-8071. And they will schedule some time with me personally where we can have that interview and figure out how we can help you. And we will do that with no charge. And we would love to have that opportunity, Kristen.
Such a great offer. Thank you, Kenny.
Yeah.
Again, to our viewers at home, that number to call is on the bottom of your screen, 844-575-8071. We have a lot more information to get into today as it relates to business owners, tax planning, the financial planning process specifically for businesses. So stick with us. We'll see you right after this quick commercial break.
Good morning, Ben.
Good morning, Ben. Hey, birthday party for Carol and 5. Happy birthday to you.
Happy Monday.
Daryl's birthday, be there every square. Happy birthday to you. As you can see from our quarterly report on slide number 62, we're trending in the right direction. All signs point to a very positive outlook for the next several years. If you peel back the onion
Ben, do you have anything to add?
The work never seems to end until the day it finally does. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Beyond Wall Street. I'm your host, Kristen Oakley, here with Kenny Porter, who is the president of Kenneth Porter and Company. And Kenny, I know we are talking today about specifically what you do for business owners and the financial planning process, the tax strategies that you're able to enact for them.
Right.
I would love for our viewers at home to hear, because you work with a wide array of business owners. So talk about some of the businesses that you currently serve.
Yeah, we specialize in working with government contractors, real estate investors, online service companies, or software as a service type business. And from 25 million in revenue all the way down to even startup companies. As long as you have a good business plan and a good strategy, we'll come alongside of you and work with you to maximize the opportunities and minimize the risk. The same thing we would do for our personal financial planning clients. As a matter of fact, if you're a business owner, that's your personal stock. That's your
right?
personal wealth creation.
Yes.
So you want to have strategies in place that can minimize and mitigate the tax consequences of doing great in your business.
Right.
And large corporations will use strategies that you have the opportunity to be afforded by the tax code to use them in your own business. And in our firm, we come alongside of you in the CFO capacity, where we're your outsourced chief financial officer. And what we do is we're going to look at it from a tax strategy point of view, and then we're going to coordinate with your tax professional who's actually doing the tax preparation, tax compliance. And so you have a two-prong approach where we're coming up with the strategy and plan, but then we're going to verify, does this plan work from a tax compliance and a tax preparation point of view? And we're forcing the CPA or enrolled agent to be now a forward planner versus pre-positioning them as a historian. So most of the time, as business owners or even as individuals, we're going to our tax professionals who's actually preparing the tax return, but we end up turning them into your husband's profession. We turn them into history experts, which is we give them all this information, but it's already happened, so there's no way to change it except maybe the next tax year. So if we focus on being progressive and looking forward in their tax planning, then we can create strategies ahead of time, but before the tax season approaches. An example of that is like with our real estate investors.
Okay.
So we have a number of real estate investor clients. And real estate is one of these great assets that's very diverse that you can do a lot with it. But some of the things that we see real estate investors miss is in tax planning. One of the biggest ones that's available to us right now under our current tax code is that there's a form of depreciation. Most companies who are real estate investors on individual real estate, they have a 27.5-year depreciation schedule.
Okay.
If it's a commercial property, you have 35 years of depreciation. That's typically referred to as straight line depreciation. But there's a simple methodology that you can switch or change called cost segregation.
Okay, cost segregation.
Cost segregation, so you hire an engineer or a CPA to do a cost segregation study for you. And this depreciation, now we can compress into 3, 5, 7, and 15-year buckets for depreciation versus 27.5 or say 35 years on a commercial property. What that does is it gives you the ability to reduce your tax in the years of early growth. So you're keeping more of your wealth. There's a president recently, President Trump, that was, his firm was a master at reducing income tax by using cost segregation studies. So, everybody, picked and joked on President Trump for not paying income taxes on one side of the fence.
Right.
But on the other side of the fence, he actually used the tax law to minimize and mitigate his tax consequence. Regardless of whether you agree with his politics, the tax strategies are sound. And we deploy those with our clients to help them mitigate and minimize taxation.
And this harks back to something we've mentioned in a previous episode, that often with the tax code and with tax planning, it's like folks are playing a game that they're not even aware of what the rules are. And what you're saying, and in that example, he was doing it by the law, the letter of the law, but he knew the tax code and he knew how to make tax efficient strategies, right?
That's right.
I mean,
and
that's
he
what
used
you're
a team
doing.
approach. It wasn't just him.
Right.
You know, you want to involve your attorney. You want to involve your CPA. You want to involve your CFO, whether they're hired within your firm or they're outsourced like we provide. You need a team approach because you need to look at it from all aspects to make sure you're being compliant and that you're following the rules. So even back to like with bringing your children on payroll, you have to have a job for them.
Right. It can't just be willy-nilly, you know.
Yeah, you can't put your 1-year-old on payroll and
No.
expect that the IRS is going to look at that politely.
Right.
You know, they're going to
You
have
wanna
questions.
do it legally,
Right.
yes.
Now, if you have a talent agreement, right, with that child, and let's say they're on your website, they're on your social media, and they're helping promote your company, you have every right to be able to hire that individual, hire that young person, and put them on your payroll and control the tax. Cost segregation, you're able to choose between straight line depreciation or using a cost segregation study. And there's a few more that I can share with in a little while that we can go into that business owners can use. But at the end, Kristen, what it comes down to is we want to use strategy that minimizes risk. And I can't stress that enough.
Right.
In any plan, whether it's a personal financial plan or it's a business financial plan, the one thing we need to focus on that's important because it minimizes or erodes wealth is your risk planning. So all the different types of risk, we want to pay attention to those and try to mitigate those where possible.
Absolutely, because you have to look at the whole picture, as we've said.
Yeah.
And I'm curious, we're going to have to take a quick commercial break, but what is that process like of you wrangling together all the key players of someone's business to help get everyone on the same page? Because I imagine that that's a process, right?
Yeah, it is. And you have to be willing to go through a process that requires other experts and professionals. But if you think about what large corporations do, they bring in teams of experts to be able to make financial decisions. Like Steve Jobs didn't make Apple happen by himself. He was the innovator, the creator, the marketing genius, but he had a team of individuals to help him bring Apple to what it is today. You have to take that same approach to your businesses and engage with people that are experts in their field and allow them to help you get from where you are to where you want to be in your business and in your personal planning.
Absolutely. So how do the business owners who are watching get Kenny Porter on their team?
Yeah, great. Thank you for asking. So if you'd like to have an opportunity to talk with us about tax strategies that we can deploy for your business, reach out to us. That number's on the screen, 844-575-8071, and we will give you a complimentary analysis to see how we can benefit you in your business growth phase all the way through to your business distribution phase and succession plan.
Kenny, thank you so much.
Thank
To
you.
our viewers at home, again, that number to call is on the bottom of your screen, 844-575-8071. You're also welcome to take out your smartphone. Simply scan that QR code in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few questions, and then a member of Kenny's team will reach out to you to set up your complimentary, no cost, no charge, no obligation appointment where you can come in and get your complimentary portfolio review and get these questions answered that are important to the success of your business. Stay with us. We'll see you right after this quick break.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to Beyond Wall Street. I'm Kristen Oakley here with Kenny Porter, president of Kenneth Porter and Company. Kenny, wow, what a valuable show that you are providing today for our viewers at home about all things related to business owners, how they can engage in strategic tax planning. I am so curious. You have mentioned the strategy to me that I had never heard before called the Augusta Rule.
Yeah.
So would you share that with our viewers and what they need to know about it?
Yeah, so the Augusta Rule is simply a strategy within the tax code that allows corporations to take rent distributions from their corporation income tax free. It goes back to this golf tournament that a lot of folks are familiar with, the
In
Masters.
Augusta, Georgia, just a little golf tournament,
Just a little
right?
golf tournament.
Kind of
Just-
a big
just
deal.
Recently had one over Easter.
Yes.
So what happened was large corporations were taking advantage of renting homes for their corporate events and for their corporate outings. And the code provided them the opportunity to rent a property, and that rental distribution, that rental income flows through to the business owner, to the shareholder, income tax free. And you've got up to 14 days out of the year that you can use that strategy.
Okay.
Now, when you use that strategy, it has to be competitive with current markets. So let's say if I rent a meeting hall or if I rent a meeting room, and that meeting room is going to cost me $1,000 a day to rent. If I did that for 14 days, that means I could take $14,000 in rental income as a tax-free distribution out of my corporation.
Oh, wow.
And so there's a few rules you have to follow. We have to make sure you qualify, so that depends on how the structure of your entity is set up. Don't go try this without a professional.
Right, don't try
There's
this
a
on your own.
disclaimer. Yep.
Right.
But those rules are very, very affordable for most corporations and LLCs out there. There's just little nuances that you have to follow to make sure we have that right. And by the way, there's that tier 2 approach where not only are we going to get the advice from us and the strategy and how to do it, but we're going to verify with your professional, whoever your tax professional is, to make sure that they're in agreement that this strategy is appropriate for the taxing entity that they have.
Because it really is that team approach. Like you said, all the important players need to be communicating with each other, making sure everyone's on the same page, everything's compliant, everything's on track.
That's right. And so that's part of our process is when we engage someone, when we engage a business, we're going to act in that business's best interest. We're going to do what's in the interest of that business, and that's the client, right? So in that client relationship, we need to create strategies that reduces the tax consequence to its shareholders or to its members. And by doing so, we want to have a team of professionals around your attorneys, your CPA or enrolled agents, or whoever's your tax compliance, tax preparation officer,
Right.
or individual. You want to make sure that all of those professionals are talking together. If you're in commercial real estate, you want your commercial broker to be able to help you with cost segregation studies and those things that will reduce taxable income. And there's a couple other tips out there right now that I would tell you that's still available. Is there's this thing called accelerated depreciation or bonus depreciation.
Okay. Accelerated depreciation, also known as
Bonus
okay.
depreciation.
Yep.
So let's say you have a company vehicle. You can go buy a company vehicle over 6,000 pounds. And there's the ability within the code to take bonus depreciation on that car. So let's say you've got a vehicle that's a $100,000 piece of equipment. Instead of spreading that depreciation over a number of years, you can compress it into 1 year and take this bonus depreciation on this vehicle that would reduce the taxable income by your effective tax rate. Because remember, if you're a subchapter S or an LLC, the profits from that business flow through to you on your personal return.
Right.
So it's important to understand the strategies that brings that top line down to a lower taxable income at the bottom line. And the ways you do that is through deductions, exemptions, tax credits, and depreciation is one that a lot of companies miss. And it's free benefits to you from the federal government.
It's a legal tool
It's
that
a
can
legal
be used.
tool for sure.
Right.
Yeah, absolutely.
Gosh, Gosh, there's so much to know, Kenny, and my head is spinning a little bit going, how did you get into all this? How did you fall in love with this? Because obviously there's so much to know,
Yeah.
and you have to want to learn this stuff to be able to keep track
Yeah,
of all of it.
27 years of mentorship and working with attorneys with their LOM and taxation, working with CPAs, and working with other business professionals in a trial and error. And you know, sometimes in business, you have to take an attempt at something in order for you to see whether or not you can have success in it. So, you know, within that, there's risk, there's tax risk. But again, if you're doing it appropriately and you're doing it from a team approach and making sure that everybody's on the same page, and our process helps people do that, then you're going to be afforded the opportunity at having success versus someone who's not taking advantage of those tax strategies.
For sure. What is the most rewarding thing for you personally about getting to work with business owners?
Yeah, the great thing is being able to see someone that comes to us that was paying a significant amount of tax, paying at a higher rate, and being able to show them verifiable strategies and bringing a team together and seeing where they can now have some time freedom and money freedom just by how we mitigated and minimized tax by using properly deployed tax strategies. And seeing a smile on the face of saying, hey, I was able to save, as an example, $25,000 in tax this year through a couple of strategies that no one else had ever talked to them about before. You have to tap your professionals on the shoulder and say, is it possible?
Yes.
And look for ways to mitigate and minimize that biggest cost to your wealth plan, tax.
Absolutely. Well, I know you have a very special offer for our viewers, and this is especially important for business owners. So what would you like to say to them as we close the show?
We would love the opportunity, Kristen, to get with folks to offer a complimentary review of where they're at in their corporate status or even in their personal planning status. And this complimentary review we're going to offer to you today at no cost. Leave your checkbook at home. You can reach us at 844-575-8071, and my team will coordinate getting you on my calendar, and we can have that complimentary review.
Awesome. Kenny, thank you so much. To our viewers at home, if you're watching and you're thinking, gosh, my financial advisor has never even mentioned half these things that we've talked about today, pick up the phone, give us the call, 844-575-8071, so that you can come and meet with Kenny and his team and see how they can enact some of these strategies for you. Thanks for watching, and we'll see you next week.